Good afternoon, folks. It's 1:43 on Tuesday the 16th of September. Just looking at the US dollar yen. Now, this has been trading sideways for quite a long time. As you know, we looked at this yesterday, and we've been trading in this sort of sideways band. Look, you can see it there very, very clearly. But when you drill down into a shorter time frame, you start to see some potential opportunities, perhaps. You can see that the market broke lower below that low trend line. Once we broke that trend line, the market headed south. We went down about another 50 pips or so. We've bounced right back. We've bounced back to that 38.2% fib, which is around 109.60, 109.65. We've got this trend line, which I put on here, which just captured all those lows quite nicely. And that comes in at around 109.65. So for me, 109.60, 109.65, good resistance level there today. Not sure why we've spiked up. We've a sudden bout of yen weakness there. I've not checked the news, but I've just been looking at the charts. So really, if I was short, I'd want to stop above 109.80, which is a pretty low risk reward. If shorts work, we should be down at sort of 109.45, 40 quite quickly. And then the question is, if this is a developing bear trend, do we go down and retest 109.20, 109.10 for some profit taking on any short positions? Yeah, not the best pattern at all. But but once you drill down as I say, onto that 1 hour chart, then you start to say, oh, hang on, maybe this is an opportunity for me. Euro has taken a hammering today. Euro against the yen, not too bad, but because the yen in itself has just weakened, but would be worth putting some Fibonacci levels on here. I can probably take these ones off now. They're a little bit out of date. That's it. If I take this and grab my fibs, take the previous swing high up there. Oops, that's not exactly right, and I do want to get it exactly right. So I'm going to take that off. There we go. And I'm going to grab some Fibonacci retracement levels again from this peak. Excuse me, still coughing from my illness last week. Now, this quite nicely shows us a good resistance level. Does it not? Yep, there we go. 23.6% fib comes in at 129.001. Well, it's around 129.10. We've got a trend line, which I've already put on here. I put that on yesterday, intersecting nicely at around 129.00, 129.10. Previous swing low adds some weight to that resistance level. So if we jump another, say, 20 pips, that should be a nice resistance level for the euro yen. The euro versus US dollar sinking quite significantly today. As I said, euro has been weak across the board. We had our channel, our trading channel that I put in yesterday with my trend lines, and we're heading now towards the lower end of that channel. So not a surprise. I talked about how we had quite a lot of resistance up here with the 200-hour moving average, and how we started trading below the 100-hour moving average and the 50. You can see they're just starting to turn a little bit negative. They've been flatlining for quite a long time. Then we broke the 500, and since then we've plunged, and it looks like we're going down further. Would be interesting to see. If we touch this lower trend line at 117.42, that will be the support for the day. Where the daily chart's far more confusing, to be fair. This has got the lower trend line around the 116.70-60 area, so that's a lot further down. First, we'll see if we find a low around 117.50, 117.40 today. Pound yen, I had an eye on that, and that looked like it would be heading south because we rejected the big trend line that I showed you on the monthly chart. I'm not going to bother to show you that again today. But on the short-term chart, we also had put some trend lines in there with the moving averages, and the market reversed nicely from that trend line, from the 100-day moving average, heading lower. We've got good trend line support in the short term, at least from this daily chart, with the trend line going all the way back to the 30th of October last year. So that's what, 10 months old, that trend line, 11 months old. And that trend line comes in at around 150.50, 150.40. So if the market continues lower, that's where we would look for the support level on the pound versus the yen. But don't forget, on the longer term chart, this does really look quite negative, having rejected, I think it was a 14-year trend line that we looked at yesterday. Now, the New Zealand dollar versus the Japanese yen, we were looking for some weakness because, as you remember, we rejected that upper trend line and we started heading lower. Let me look at that on a 4-hour chart, or even a 1-hour chart. 4-hour chart, I think, is what I want. 4-hour chart, there we go. Right, now we should be able to see the channel a little bit more clearly. There we go. as you see, just rejecting it. I talked about some support around 77.70, 77.60, and actually we've sort of hovered. We seem to be magnetised to that level. We're sort of 30 pips either side of it. So I'm not really sure what's going on there. One minute it looks like it's broken, the next minute it looks like it's holding, and then we come back to that level. So it looks like the 500 the 500 period moving average on the 4-hour chart. That's the blue line. That seems to be holding things at the moment. Let's just go over that historically and see how that's done in the past. Not actually been much of a factor, but look, there you go. Gold is a big mover today. Gold was really confusing for me. We were just stuck in a very odd sideways pattern. I couldn't make head and tail of it, to be honest with you. But I did have this trend line drawn on there yesterday, going in from the 16th of August, that low, and it looked quite nice because the trend line had been tested several times and held perfectly. So guess what? As soon as that trend line was broken, the market has plunged. Now what I probably should do is put some Fibonacci retracement levels on there again and see if we can get some idea of where we are headed. So we're headed very closely towards 50% fib, which is around 1757, 1756, not far off there at all today. We've got a low at 1761. That would be my next target. Whether that will be a big support level or not, I'm not sure. Personally, I wouldn't really want to risk a long down there, I don't think. A lot of people would argue that this is a head and shoulders pattern. They could argue that that's the left shoulder, that's the head, the right shoulder. In the context of the rally, I don't think it is. That is a very, very big head and shoulders pattern compared to what looks like just a few days of a rally. So yeah, this gets misinterpreted all the time. You'll know that's one of my pet hates on social media, people calling head and shoulders patterns all over the place when they are not really that. If we were to bounce, then we should definitely have some resistance around sort of 1775, 1780, which is the 38.2% fib, coupled with that trend line in previous lows. If we were to bounce from, say, 1760, 1755, then that would be not necessarily a target, but it certainly would be strong resistance. Okay, I think I'm going to quickly look at the S&P because we've been focused on that a little bit. Yesterday I talked about how we were testing an important support level. If you watched the video, I talked about how the 50-day moving average has been a really good support level. We've bounced off it. That trend line certainly has worked too. I was slightly concerned that we'd broken below the trend line, but I said we really needed to close the week below the trend line, not just a day. Well, guess what? We've bounced back aggressively from that 50-day moving average yet again. Seems to work very, very often. Not quite a bullish engulfing candle yesterday, but certainly a strong candle. So, as usual, the bulls are there. They're waiting on the support levels, and they are ready to jump into these US stock markets. Always looking to buy the dip when possible. I don't think there's anything on the short-term charts really to talk about. No, not really. Let's just have a quick look at the 1-hour chart in case I've missed something. Not really, no. They're mostly flatlining. But again, so yeah, buying on weakness in the stocks, it just keeps on working, doesn't it? Hope that's helpful for today. Join me tomorrow, Friday, last day of the week, and we'll see how things are shaping up for the weekly closes. Good luck this afternoon.